Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As you can see from the background, I'm back up in the mountains for the July 4th holiday. Happy birthday, America, and happy birthday to me. And I had a surprise birthday gift this year, something extremely unusual. I actually got to drive a tank. There's an area called Tank Town, and that was at one time a fully sized minivan that got crushed as I drove the tank over it twice. So I highly recommend that if you ever get the opportunity. It was a blast. It's a lot harder than you thought it would be, but what a fun experience. All right, let's get to the markets, what you're really here for. We take a look at the charts before we get there. We did have some economic news to talk about that came out on Friday. We had the non-farm payrolls report. Remember, that's the government's version of the jobs report, and it came in at 206,000. 200,000 were expected, but then when you look behind the scenes, as it has been, a lot of those jobs were government jobs that were being added. So it was taken as actually a positive. And as you see from the next chart, it's showing you a pretty steady decline here on jobs being created. So that's what the Fed wants. They want to slow down the jobs market. They don't want to kill it. They don't want to unduly harm the economy. They just want to see these slowdowns. And so I think we're getting to that point. I actually had posted some commentary for our subscribers at evotrader.com that the Fed seems to have and the market seems to have what it needs for a melt up. So let's take a look at the chart on the S&P and I'll show you what I mean. I don't think we're going to get any more of this vertical stuff like we had right here. I think we're going to move more towards a 45-degree angle move as we continue up. You can see we've already hit the bottom of that Wave 5 tap box, the forecasted area. This is the range. The midpoint's where the 5 is labeled. We did get a little bit of a couple days boost, but it was holiday trading. And so you tend to get exaggerated moves during the holidays because volume is down. Everybody, I think, turned this into a big 4-day holiday, 4.5 days as the market closed at noon on Wednesday. So we had the moving averages. You can see we're just a tiny bit above the 10-day moving average. So maybe we have a little bit of a sluggish start to next week's trade as we allow that 10-day moving average to catch up. And then again, I think we move more on this 45-degree angle movement into the election. The market is pricing in those 2 rate cuts now. Very high chance on September added in. I'm still not sure on September. I do feel like we'll get one in December. I think if the economic data continues to come in weak, maybe the Fed does move in September, but gosh, right in front of the election, I don't think they want to. They're only going to do that if they have to. You've heard me say that before. But continuing to move up nicely. We're moved above that 61.8% stubborn fib level. You know, I've talked about that a lot. The 61.8% fib level is the strongest, and we bumped our heads there for a couple weeks. And then we've been able to break above it with this renewed hope of a second rate cut, or at least multiple rate cuts this year. It remains to be seen, but that's what the market is pricing in. If we take a look at the VIX, we talked about this before with volatility, that the market could go below that 12.5 level. And you can see that we have for about the past week traded below it, but even on the close we move right back up to it. So we're not moving significantly below it. We're just kind of trading right through 12.5, which is really interesting. There is a bit of a descending triangle here. Remember, any triangle can break either direction. You've heard me say that 1,000 times as well. And there is history of the VIX being in single digits coming out of the GFC, the Great Financial Crisis. So we could drift lower. I think the market could drift higher and the VIX could drift lower. I think those two things make sense. Always makes you a little nervous when things seem to make sense, because oftentimes the market does things that don't make sense. That's why we read the charts from just a normal, what mentally seems to make sense is not always what the markets do. But we could bounce up, but I think we would have to have some sort of a real surprise hot inflationary data. We had the weaker PCE the week before. So again, all the pieces are in place for just a slow move up and multiple rate cuts being expected. Let's go back and look at the dollar. We'll look at rates as well. The dollar is cooperating very well, staying in this trading range. I've drawn those lines the past couple of weeks. I think that's ideal. We do still have this labeled wave 5 pattern. I kind of think that may relabel just as the TNX did, that I'll show you in a minute. So I think if we just churn in this range, that's the most ideal scenario. We definitely don't want to see the dollar go screaming to the upside. We don't want to see that. And we don't want to see a big breakdown in the dollar either, because then that means that we have had some really bad economic news, and that's not good for anybody either. So if we look at the TNX, there's where you can see no more wave 5 pattern. It was relabeled away from it, so we don't have to, at least for a while, worry about any threat of a 5 handle on the 10-year. So we're just down here in this zigzag pattern. Now, what's interesting is you can see where the arrow is. We've come down to 100%. That's what we're supposed to do, as you remember from a zigzag pattern. So that's completed. We stayed there for a while. That's the power of these zigzags and 100% extension. If you're going to go further, you're supposed to go up and retest previous fib level and then move down. And it kind of looks like that's what's going on. We've come up here and now we're free to go down to this extended 161.8% level if the interest rates want to. It seems counterintuitive when I say that I don't really want to see rates go that low, because, of course, rate cuts is what the market wants, and that's what's driving the market to the upside. But if we get rates too low, then once again, that means that the economic data is pretty weak and the Fed is pricing in more and more rate cuts. And I just don't really feel like we want to see that bad of economic news. I would just assume see us stay right in this range, not break this 100% extension and come down to 161.8. So in summary, I'd like to see the TNX stay in this range here, and I'd like to see the dollar stay in its range. I think that's most constructive for the markets and the economy, adding that in. So let's take a look at some of our other markets, looking at the DIA, which has been a little more stubborn. We did have this zigzag pattern where we went right up to the 100% level, and we were looking to see if that was going to extend up to 161.8. And so far, we've just churned sideways after hitting that. So we did come back down, test the previous fib level here. So it's free to go up to the 161.8% level if it wants to. I like to look at the DMI to see if there's going to be extended levels. It's not the most supportive DMI, but it's not negative either. It is constructive with the ADX moving up. So when the positive directional indicator is moving down, that just is a day-to-day sign of buyers. And of course, when you have weak trade and a holiday week, not surprising to see that tick down. A little bit of a tick up on the negative directional indicator. But I think we could say that the DMI could turn around. It's still constructive enough to see the Dow break above this level here of the previous wave 5 high and move up to that 161.8% extension if it wants to. It just, as you can see, has gone more sideways than the SPY has. Looking at the Qs, still where all action is. And with the talk of more rate cuts, the Big Mag 7, all those stocks, that's still what's going on. And again, maybe a little bit exaggerated moves here on the low volume over the holiday week. And we're a little bit away from the 10-day moving average here. So same scenario here that we showed in the SPY. This did relabel to a wave 3. If you've been watching, a couple weeks ago, said that we thought that would happen, and it did. And so we do expect to see the completion of this big zigzag pattern on the Qs up here into the 520 area. But we may have a little pause here at the beginning of the week, maybe just a little sideways movement here is warranted, and let that 10-day moving average catch up. Just a tiny bit overbought on the Qs, but great looking patterns here. Zigzag and a wave 3 is my favorite directional pattern. If you're an EvoTrader.com subscriber, you know that. That's what I like to trade directionally because it's a little shorter term. And the wave 3 is the strongest wave, and you have a zigzag. Even Elliott liked the corrective pattern. So all that plays in for my favorite pattern. Looking at the IWM, now here would be a little point of concern if you're a believer that the small caps are an indication of risk on, risk off in the market. A lot of people do feel that way. And we're just kind of hovering right at the point of this triangle. I'm going to show you another example of this before the recording's over. So you can see a little bit of a bounce up here. and then we came back down. There's three ways that a triangle can break out. Sometimes it breaks out, comes back down and tests it, and then takes off. Other times it just goes up. And then the third time is that you have a breakout and it's a false breakout and you move the opposite direction. So the first breakout's a head fake. We still have to think that that's a possibility. That has to stay in the back of our minds. That could be a false breakout or it could be a test. So we don't have enough information on the IWM right now on the breakout of this triangle. But we know where resistance is at 210. We know where support is at 190. We've talked about that a bunch of times as well. So we just have to kind of watch and see what happens with the IWM, see where it goes from there. Boy, if we go to look at Bitcoin, that's where things have been really crazy. And the crypto world, there was another crypto exchange that had to be liquidated. If you're wondering what in the world happened, remember when I was talking about we had to hold 60,000? If we didn't hold 60,000, then we had a pretty good chance of coming all the way down here to this 52,000 level. We got awfully close there. We bounced up a little bit from there. But this is what I was talking about. I said that if we broke 60,000, we might go down to 52, and it wouldn't happen in a very long period of time. It'd be pretty quick to do it. So that was pretty spot on. I'm no crypto expert, but I can read charts, and that's what the charts were showing. But what happened was the liquidation of that exchange put millions of dollars worth of coins back out on the market. So if you've been wondering what happened here, that's what happened. So once that gets absorbed, I think we turn and come back up. So I don't think this is any sort of a collapse or crash in crypto land. It's just an event that occurred. And the same thing happened with Ethereum. Remember we said we had to hold this 3,500 level, and the longer we couldn't get back above it, the greater chance we had of coming down to 3,000. Well, we did do that on Ethereum. So we're right back here to support. We bounced back up again here, but same scenario here. So I think once the extra coins get absorbed, then perhaps we can resume upside. But if we break 3,000 here on Ethereum and we break 52,000 on Bitcoin, well, then we have a whole different scenario to talk about. But until that happens, my best guess is that we absorb the extra coins and then we start to move back up. We'll see how that plays out. Looking at some other metals, looking at SLV. We talked about SLV in this week's TradeFinder. In fact, during this week's TradeFinder, this was the case study consideration that we posted on the website. And if you want to go to hub.com and get a copy of the software, if you haven't gotten it yet, there's a area on there, a social media aspect. And when we go through TradeFinder, we post those ideas there, and then you can vote on them. So it's posted there. You can see where it was. But we do TradeFinder every Tuesday at 1 p.m. Eastern time. So it's during market hours. And you can use that link that you see on your screen now to subscribe. If you haven't, join us. We have a great community. We look at the markets, we look for trade ideas, and we have a live Q&A. It's a lot of fun. They ask great questions. So love to have you come along and join us there. But as I mentioned, coming back to the chart of SLV, that was our case study consideration this week. And boy, has that worked out well. So we had this triangle here. I've talked about this chart of SLV before on the multiple corrective patterns. So we still have the 5-wave labeled here by the algorithm. And it looks like we could continue up and make a new high in the wave 5. We had a corrective symmetrical triangle here with complex C waves on 2 different zigzags to the upside. So we had this wave 5 showing a higher move, and we had 2 zigzags all converging somewhere around in this 30 area where we thought it could go. And we sent that out as the case study consideration on Tuesday, and look what happened on the past couple of days. I know there's a lot of lines on the charts, but boom, boom, big gaps up in silver. So far, that's been a home run. Don't think it's done, but we are overbought. The 10-day moving average is way back here. So maybe we get a little calm in the metals market as we move into the beginning of the week. That would be warranted. You don't want to see things go vertically too long. You know how the rules are. Anything that goes vertically up oftentimes comes vertically back down. But the main reason is the more vertical a move is, the stronger the corrections are. So the more you move in a 45-degree angle, we all know markets move in impulses and corrections. That's the crux of Elliott wave. That's why Elliott wave works so well. It's a great indicator for showing that. That's how all markets work. They don't go in straight lines. But the more vertical the move is, the stronger the correction is. The less vertical, the weaker the correction is. So we don't have to stomach big, strong corrective moves. So anyway, wanted to show you that. That was pretty cool about going through SLV. So let's look at USO, and we take a look at USO here, and oil. My goodness, just continues to go to the upside. You've heard me talk about the vehicles I drive. Don't drive a tank on a regular basis, but they act like it from the way the guy that owns the place said that tanks get 1 mile to the gallon. Well, my cars do a little better than that, but those big V8s are not gas friendly. But when you look, we've had this A wave impulse, just a very classic Elliott wave chart on USO as well. Perfect completion here. Illustration of a zigzag pattern coming down to the 100%, going sideways, retesting the previous level, all the stuff that I talked about, moved down to that 100%, 161.8% extension. And then we had an expanding triangle. So we had a complex C wave here as well. So all that's done. This is a new impulsive move. So this is a new A wave. Remember the rules. Every 5-wave pattern starts with a zigzag, but not every zigzag turns into a 5-wave pattern. So we're in an A wave right here. And how far can this go? That's the one question mark in Elliott wave, is how far can an A wave go? After that, we have a pretty good percentage chance of figuring out where things are going to go. So you just let this and figure out when the correction starts, how far it goes, tells us what the next move's going to be. So I hope with the fact that we've hit the previous 61.8% fib level, that maybe that acts. It did a little bit here on Friday as a point of resistance. We're a little bit above the 10-day moving average, so maybe that's all that is. Then last week we had gone sideways here for a bit and thought, maybe on here that's going to be the end of it. Nope, another leg higher. I'd like to see oil cool down. We're already seeing some weakness in consumer spending. Income's holding, even in the jobs report. Payrolls were still in line, but spending is, so people haven't taken a big hit to the income yet, but they're spending less. So people are getting concerned about weakness in the economy. And so paying more at the gas pump doesn't help that, as it takes more money out of our wallets. So I'd love to see oil give us a little bit of a break here at some point, but we just have to watch it until that corrective move and reversal occurs. All right, let's get into some stocks of interest, and we'll start with Tesla. And by the way, when we look at these stocks of interest, these are featured each week. I look at your comments, and just as a reminder, every month this year, we're doing a drawing to give away one of our level 3 subscriptions. And you see it on your screen right there. We have the Impulse portfolio, which is our AI-based directional portfolio, highly focused on those zigzags within wave 3s. We have the volatility portfolio, which are triangles. You saw an example of that with that SLV move breaking out of the triangle. And then we also have the time strategy, also AI infused, more of an income-based strategy where we do calendars, butterflies, things like that. They're not the big home run trades, but they're more steady income drivers. All you have to do is post a comment underneath this video, and you're registered for this month's drawing. So be part of that. And I read all of your comments. And when you have suggestions of stocks you'd like to look at, I feature as many of them as I can. I answer as many as I can, time and travel permitted. All right, so let's go back and look at Tesla. We've been looking at Tesla over the past couple of weeks, and we had been right here in this triangle with a symmetrical triangle at the end of it. So consolidation with a symmetrical triangle looked like an arrow, I said. And people have been asking about Tesla a lot, and TradeFinder as well. And my comment was, we're in this trading range here, and let's let it make a break one way or the other. If it broke below this 175 level, then you had a bearish trade, at least down here to 160, maybe all the way back down here below 150. But if it broke to the upside out of this symmetrical triangle, let it break above 200, because that would act as resistance. And if we could get above 200, then you would go long. And that's exactly what happened. And now we're too vertical on Tesla. That's too vertical. You don't want to chase that move. But if you were listening and said, if it gets above 200, you can go long, I thought we might have a move all the way up here. And it was probably where we're going to wind up on Tesla, because there was nothing on the way down. We just kind of came steadily down. So there's no resistance on the way up. And there was heavy short covering. You may have seen the headlines on the financial networks on how much money has been lost shorting Tesla. There was big bets on shorting Tesla, and they had to cover, and a whole bunch of money was lost from short covering. And that's part of why it went so vertical. The short covering is what creates these kind of vertical moves. But Tesla came out, they surprised on delivering more cars than expected. But little caveat here, and this could be what brings us back down to earth on Tesla, is the earnings reports coming up. All they did was show deliveries were greater than expected, but they've been doing a lot of cost cutting to sell those. So how's the bottom line going to look on the actual earnings report? So be careful going long Tesla now. If you miss this vertical move, this is not the time to chase it, in my opinion. Looking at Nvidia, everybody wants to know when it is going to take off again. I just want to we had this big move up at the beginning of the year. We got even a little bit more vertical here as we went into that big split. And I just think we're going to move more on the 5-degree angle. I've been saying that for a couple of weeks. That seems to be what's going on. It's going to be more of a creep higher here. You're not going to see these big extreme moves, I don't think. And if you're wondering why, it's because all the institutions, so many people had Nvidia, and then you have a big stock split like that. And as it continues to move up, they tend to sell off some of those shares. They still have a big position, especially with the big split, but they can sell some shares, book some profits, and then still stay in the name. So it tends to hold down the more vertical type moves. So I don't think the move's done in Nvidia. People ask that on TradeFinder all the time. No, I don't think it's done. I just don't think we're going to see the craziness that we saw in the past, and a little more of normal movement to the upside. Y'all asked about the EEM in the previous recording that we had. And look at this. Here's another triangle pattern. I actually sent this out as well to our volatility strategy subscribers at evotrader.com. It's one of the ones in the level 3 that we're giving away. It's worth thousands of dollars. So please leave a comment. And by the way, wouldn't mind if you hit that like button, hit subscribe. Let's get to as many people as we can. We're really trying to help here from an educational standpoint. But here's the triangle in the EEM, emerging markets, and there's the breakout. And so there's another example of one of the ways that we can break out of a triangle. So do we continue up? Do we come back and test it first? It can do one of those two things. That's a pretty strong breakout, so I doubt that's the third one, which is a false breakout or a head fake. I think we're going to continue higher on the EEM. It's just, do we come back and test the point of the breakout first before we continue higher? But the timing on that was great as we sent it out to our subscribers. So that's performing very well. SMCI gets asked about a lot as well, so I thought I would feature that one too. We're just going sideways here, staying in this big trading range here between 700 and 1,000. And I think you just wait and watch on SMCI. Now, the one little bullish thing is there's a lot of speculation, and that's all it is speculation, that they may be the next one to announce a big stock split. So that would keep you interested in the name. Other than that, it's kind of the same thing we talked about with Tesla. You want to see it either break below the support level or break above the resistance level to go long. It's just been churning in this trading range ever since it was added to the S&P. And that makes sense. That kind of takes the steam out of these crazy vertical moves as well. Same thing as a stock split would do. But the fact that it's in the S&P and it's trading, at $846 now, I think they may look to do a stock split. I think institutions would encourage them to do that. Because institutions then they don't like having $1,000 stocks in there. It takes up too much of the portfolio for just one share of stock. So I do think that's a possibility. So that's something to keep in the back of your minds. Boeing, another commonly asked one, and the same theme here with these stocks being in trading ranges. You've all heard all the negative news about Boeing. I don't need to reiterate it. You just wonder how much more bad news can come out, and maybe because we didn't break that support level with the last batch of questionable news that came out, whistleblower and all that kind of stuff you've heard about. We've been able to hold this level. Institutions don't want to see it break below here. They can read charts too. And so perhaps we move back to the upside here on Boeing. But if we break that level, then move lower. If not, then perhaps we come up and test this upper level here where this previous wave 4 was. And if we can break above that, we're off and running. But I think you just have to sit on your hands right now on Boeing and wait for one of those two levels to break. So same thing we talked about in Tesla. All right, let's finish up this week. See what's going on over in India. I hadn't looked at that one in a couple weeks, but not much has changed. Still powering higher. You just have to be so impressed with what's going on the Nifty or the INDA, whichever is your favorite market to look at for the Indian market. And we just keep going to the upside here with this move. Maybe we're getting just a touch vertical here. It's just a little higher degree than 45 degrees, so it's not too bad. But we had this ascending triangle pattern here. And then here's one of those ways. So we came up, broke out, tested the breakout. Then we had the two really weird days from the whole election craziness. So just kind of discount those. I look at this more as a breakout, test of a breakout, and then off we go. One of the three things that can happen with triangle breakouts. And so now we're at 159%. So we're getting up there. We're awfully close to that 161.8% fib level. Maybe that creates another little pause in the INDA. And then we'll be talking about the same thing that I talked about with the Qs a while back. Is that 5 going to relabel to a 3? Or is it going to be one of the very rare times that a wave 5 goes to a 261.8% extension? It happens. It just hasn't happened very often since I've been trading Elliott Wave since 2001. So we're almost there. And then that's what we'll be talking about on the INDA. But if you've been following this market and been bullish on the INDA, obviously you've done pretty well. So once again, happy holiday weekend to everybody. Enjoy the rest of your weekend. Thanks for spending a few minutes watching this recording. Hope you have a great next week. Look forward to talking to you soon. Take care, everybody.
If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.